Market downturns and interest hikes. Hi, my name is Julia M. Spencer. I'm a real estate advisor, investor, and your number one source for real estate advice online. Hi from New York City. I'm actually here in New York City. You might hear some of the background here. And I'm staying at a friend's apartment. She's letting me stay here right in the middle of Manhattan. I love it. We're about to go out and have some fun here. My kids and I, we're always going on vacation. This is our January vacation here, getting away from the warm south, going into the cold north, which is just perfectly fitting anyways. But even when I'm on vacation, I love to answer you guys' emails and answer your questions. And I did get a really good question yesterday from an overage investor actually that asked me what kinds of things I cover in my regarding overages in my ebooks on tax sale foreclosure investing. And I wanted to answer that question here. And specifically, and I don't have the email in front of me, so I'm just going to paraphrase it basically. So it basically just is an email where he asked that he bought a course from someone. He names the person's name. I don't even know who that is, but it was basically a course for him to learn how to do overage investing. So he went out and he found all these leads, provided all these leads to the guy who sold the course, and never heard anything from it. So there was no results. And he was kind of like upset about the fact because he thought that actually he's being taken advantage of, having to do all the research, having purchased the course, obviously having to do all the research, and he's not making any money. So he's basically asking me is there any way that I can help him? What is covered in my ebook? Is there something different that he could do? And how should he go about that? So my answer to that is my answer to all of you guys, if you have a similar question, is that I don't really do overage investing. I've kind of dabbled into that for a little bit. But like I said in several of my videos, overage investing, I consider that a cash recovery business, kind of like debt collection, just on the other side, basically a debit collection versus a credit collection versus a debit collection. And the methods are the same, skip trace methods are the same, trying to find people, putting them on contract is all the same. And there's not really any real estate here. Real estate it's kind of like real estate is part of it, but not really, because you as the overage investor, you're never going to actually own that real estate that you're trying to collect the overage from. You're going to research it, obviously. You're going to learn about it. You're going to learn about how to do title searches and look at all the lien holders at the courthouse. You're going to be able to learn how to find all of that. And that's kind of the same, but you're not in it to actually build a portfolio of real estate. And that's really the key. And I had a discussion with my friend Jason Hartman here recently. He was on my radio show, and he said that, yeah, people that do overage investing and flipping, wholesaling, all these people, they always have cash. They have money to spend. But the people with real wealth are the ones that actually own real estate. And he also stated that he'd prefer real wealth over cash any day, and I agree with that. Now, however, you do need cash, obviously, to live on. And so use overage investing, wholesale investing, flipping, whatever you do, as a springboard to build yourself a nice little portfolio of buy and hold real estate, which will then basically pay your way, because you want the real estate to work for you, not you working for the real estate. And I've iterated, there's nothing new with this part of this video, obviously. But what I wanted to talk about with this video is interest rates and market fluctuations, basically. Because when I basically said to the subscriber the same thing that I'm telling you guys right now, he said, well, I don't think it's a good time to buy and hold real estate because interest rates are going up, so it's going to be really hard to sell properties. And also, what about market fluctuations? What if you don't know your market really well? You don't know where to buy the real estate, What if you get screwed on your real estate purchases? And those are all valid concerns. And here's my answer to that. I have myself bought real estate in markets that were on the downturn. In fact, I still own real estate in those markets. And that's basically where I purchased the property for a set amount of set price, basically many years ago. And I really didn't make money on it. It's basically hasn't appreciated in value. Normally, if you buy real estate, you'd like to have all 5 dimensions work out for you. And that's basically your tax savings, your appreciation of the value of the property, the amortization of the mortgage if you have a loan, your depreciation expenses, which are your tax savings, and all these dimensions, you actually want them there. And of course, your cash income from the rent. So you want all of those things when you own real estate, or as many as possible anyways. But I've bought real estate where this actually didn't work out, and I've made videos about this. I've actually made videos standing in front of this property. Really nice property I purchased for $145,000 in 2005 in Macon, Georgia, right in the middle of Georgia, about an hour south of Atlanta. And that property appraises right now for just around $100,000. So I lost $45,000, a third, in equity in that property in terms of what it's worth. However, what I was able to do with this property, I kind of just kept it up minimally, kind of just kept it going the way it was. Any maintenance or repairs that I had to do, put a bunch of furniture in there, some of my old furniture, made it into an Airbnb rental, and I rent it now for a minimum of 7 days, obviously, because I'm not there, and I have somebody else help me manage it. But we're basically, we weren't able to get the dimension of appreciation and value on this property, and it's not really worth it to sell it, and I can't sell it right now because of that reason, because I couldn't sell it. My amortization of the mortgage is being paid down over time, kind of keeps pace with the decrease in value of the property. So at any time in the last 13 years, had I sold it, I would have not made anything. I would have just made zero. And so I decided to just keep it, make it into an Airbnb vacation rental, which actually enables me to rent it pretty much most of the time, full time. And I get twice the rent that I would normally get, just because I put furniture in there and I provide utilities. So it breaks kind of even. I'm not making any cash on this property. In fact, I'm losing a little bit. I've not gotten any equity out of this property, obviously, because it lost in value. However, my loan is still being paid down, and I'm still using it, the depreciation expenses, as a tax savings on my tax return. And I still have real estate. Real estate's never going to be worth nothing, and we're 13 years into this 30-year mortgage now, so almost halfway there. And eventually, in the next couple years, 10 years or so, it's going to be paid off. And guess what? Then everything that comes in from that point onward is going to be pure profit. So don't have to worry about that one. That one is just kind of sitting there. And you kind of have to try to avoid those. Obviously, you want to have one that has good income in all dimensions. But if you can have a couple of bad ones, like a couple of black sheep, as long as you have other ones that make up the difference, you're still in a good position for the future. And we're talking about future long term, we're talking about retirement, things like that. I don't plan to retire in the next 15 years. Hopefully, knock on wood, that I stay healthy and everything. But hopefully I have many, many more years past that, maybe 20, maybe 30 to work, because I love what I do. And so by that time, that property will be paid off, and I'll get rent no matter what. And it always rents out because it's actually a really good area. So in terms of market fluctuations, think like long term. Don't think like 1 year, 2 year, 5 years. Don't think 10 years. Look at where you're actually going to be further down the line, even more. It depends on, of course, how old you are. But you want to have a portfolio that pays you, and not you having to work to get the money, which is what all the other investment strategies are. Wholesaling, overage investing, flipping, rehabbing, all of these things make you cash. But if you don't use that cash to invest in something long term, you basically just have a high paying job. So let's talk about interest rates. The other concern the subscriber had is, well, I don't want to buy real estate because interest rates seem to be going up now, which means I'm going to have a hard time reselling the property. Nobody's going to want to buy if the interest rates are high. So again, same answer, same concern. If you have property and you own it, you can always rent it. People are always going to need a place to stay. The population of the world is increasing. As long as you pick the good area that has kind of like an economic stable situation, I guess, not an economic downturn, you're always going to be able to rent there. You're always going to have tenants that are going to be paying rent to you. And as long as you think long term, don't concern yourselves too much with interest rates. Don't concern yourselves too much with market downturns. And also experiment if you can, of course. You know, get into a couple different markets and see how your real estate does there. If it doesn't do good there, get out of it. With this particular property that was my example here, I actually, in that same exact market, at one point I owned actually I owned a lot more, but 4 properties that I actually purchased with loans, with mortgages, so I had like actually a commitment to pay every month. I had a lot of tax sale foreclosures in that area as well, but the 4 main ones I had in that area, when I realized that the market was turning down and it wasn't going anywhere in the next 10 years or 20 years, I sold off everything except for this one, which I was too late in the game on that one, so I ended up keeping it. But having 1 in a bad market is better than having 4 in a bad market. So either way, I think I made my good decisions, but there's a point to be made to experiment, and don't be shy. The old proverb in the real estate profession always is, buy now and wait until later. Don't wait until buy real estate. So it's always good to buy. It's always good to buy. Where? It's another question. Talk to people, talk to other investors, talk to realtors. They might not give you all the whole picture information, but talk to other investors in your area. Join a real estate investment club. Talk to me and leave me questions, comments, suggestions at the bottom of this video. Also, please go to my website, juliamspencer.com. It's at the bottom of this video. You can subscribe there. You'll get a newsletter and also coupons and offers for my ebooks, which are also on my website right here on this website under products. And yeah, keep track of me. Go to my YouTube channel, and I love to hear from you. Send me anything you got. I love real estate, love talking about it, and anyways, have a great day. For me, it's Saturday. I'm in New York City. I'm gonna go explore the city now. My son's won some New York style pizza. I don't know if any of you guys are from New York. I heard it's the best thing in the world, so I'm gonna try to get some. Have a great day.
For your free guide to real estate investing, visit juliamspencer.com.